you see a flood of dollars coming home. At the same time, our foolish president wants a $5 trillion deficit this year. You have a government that is addicted to spending, like a heroin addict to the needle, and you are decreasing demand exponentially in the need and or desire to own dollars, which means you create more but have less demand, the price falls, interest rates have to rise, bang, everything blows up all at once on a Monday morning simultaneously. Stocks, bonds, real estate, and the dollar all collapse. Now, could it be a movie? Sure. Could it happen? Absolutely. I think we are closer to that happening than I ever would have given credibility for a few years ago.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. We're always glad to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals, and he joins us for this weekly market update, March 29th, 2022. Andy, thanks for coming back on.
Great to be here, Dunnigan. Sorry I have to be on the phone again today, but doing a little more traveling than I would typically like, but always important to catch up with you.
And our viewers are glad. We thought we were going to miss out this week because of your travel schedule, but you were able to squeak us in again, audio only. So we're grateful for that. And before we plunge into some topics about the retail supply chain for precious metals and some typical concerns that viewers have raised about the world and how it's changing and affecting them, I wanted to give you a chance to give us a quick update on what you're looking at strategically in the financial world, specifically about de-dollarization pressures. We're certainly aware as Americans directly of the dilution of our currency, the US dollar, overprinting, over expansion of the currency supply, and how that's driving inflation and destroying purchasing power of anything we have in dollars, like savings accounts, checking accounts, earnings, pensions, et cetera, et cetera. But there's a bigger picture than that globally about the dollar and the world pivoting away from the dollar, including Russia and Nigeria and Saudi Arabia. You and I were just talking about that. Could you tell us what you're watching in terms of some of these major geopolitical pivots away from the U.S. dollar?
Yeah, well, for the last 50 years, it's been the petrodollar system that has allowed this country to live beyond our means, and it's very easy, I think, for most people to take that for granted. But I have a feeling that this privilege that we've been given is waning. When you see the weaponization of the dollar, it is hastening the demise of the dollar, and I think you will see a lot of extra dollars floating around or flooding back home, looking for a home, that are now needed to purchase oil that won't be needed. When you see Nigeria sign, well, let's go back. Oftentimes I can be redundant in the things that I say, and maybe that's bad, or maybe it's not. Maybe I try to drill a point home. In many of the podcasts I've done since this last September, all I talk about is supply chain and the effects of Russia signing a joint military cooperation agreement with Saudi Arabia and Nigeria. That's when it started. And it became very obvious to me that when you have been given the world reserve currency status for a protection of the Saudi kingdom, and you see another military superpower do the exact same thing 50 years later, it became very obvious to me that the end of the dollar as the singular world reserve currency was at hand. You got Fed Chairman Powell, who came out just a few weeks ago, right after that happened, and said, yeah, there's probably room for two world reserve currencies, almost as if he is acquiescing to this reality. The day after Saudi Arabia signed this deal with Russia, Russia signed it with Nigeria, the two biggest OPEC producing countries in the world. And when that happened, it was very, very, very obvious to me that this was happening. And then, of course, the day after that, Russia announces that they were outfitting their nuclear submarines with hypersonic ICBMs. Their way of saying, don't try to do the Saddam Hussein, Muammar Gaddafi end around on us, wouldn't end well. And you could see this was chess pieces moving. And the lack of media coverage in this country is just, it's astounding to me. Because a couple, I don't know how many days ago, a week, 2 weeks ago, Nigeria inked this deal with China. They will now sell their oil to the Chinese in yuan. Secondly, it was announced that Saudi Arabia is in negotiations with China to accept yuan for their oil. Now, one of the things that we've talked about before is the Shanghai International Energy Exchange, where an oil producer can, participate in the world's largest market, try to capture, market share, and it sells oil or natural gas or whatnot for the petro yuan bond that is immediately convertible into gold on the Shanghai Gold Exchange. So you're seeing a drive, and I believe that will push the petrodollar status way down the totem pole when you're going to see alternatives to the petrodollar status. And you're seeing Russia now saying that they will accept gold and or Bitcoin from unfriendly nations, or rubles. They are pegging their ruble to gold right now, and at the rate that they're doing it as of just the other day worked out to about $1,610 per ounce. That's putting a floor under the price of gold. And although there was a time frame on it, they were going to honor it, I think, through June or whatnot. I think it's the beginning of the end. It's a test, and I think you're already seeing the ruble strengthen on its own considerably. But what we are witnessing without any acknowledgement from the mainstream, so the majority of the country is asleep and will wake up to a new reality that I think could very quickly be what Klaus Schwab has been talking about for a very long time. And I just want to go down this road for 1 second. If someone said to me, here's a screenplay, here's where we are, I want you to show me the Great Reset. Finish the screenplay for me. You have all of the pillars of wealth, stocks, bonds, and real estate, all inversely correlated to a rise in interest rates, all at all-time highs, all courtesy of 80% of every dollar ever created. We've always been saying 50. The new number is 80% of every dollar ever created in the history of this country was done in the last 2 years. This is what has driven the inflation. It's not corporate greed and price gouging. It's an irrational, ridiculous Federal Reserve that has created the impossible task of price discovery as money has flowed into financial assets at all-time highs, inversely correlated to a rise in interest rates. But the one piece of the puzzle that I never added to this, I always say the three pillars of wealth, the fourth pillar is the dollar. You are now usurping the dollar globally. We have 1 billion people roughly in the West, between Canada, U.S., and parts of Western Europe, versus 7 billion people in the rest of the world. And I think that when the dollar loses its singular reserve status. Seeing how weaponizing of the dollar can penalize a country, and I think when you do that, rather than allowing everyone to use the currency, but you weaponize it and choose who cannot use it, you are incentivizing these countries like China with the SIP system, cross interbank payment system, the Shanghai Gold Exchange, the Chinese Petro Yuan bond. All of these pieces are in place to launch a new system that will, as Fed Chairman Powell said, be a second world reserve currency. He came out and acquiesced just, a few weeks ago publicly. There is room for a second world reserve currency, he said, because he knows the handwriting is on the wall. But when this happens, the fourth pillar of wealth, dollars, collapse in value. So when you talk about a great reset, I never really was able to wrap my mind around it when it first came out in 2020. Sure, right. But think about it. You have everyone piled into traditional assets and stocks and bonds and real estate. And if interest rates rise, just to find equilibrium in the economy at 8% inflation, 8% on the federal funds rate would see a 10, 11, 12% 30-year mortgage, would see the bond market crater by 80% or more, and would kneecap the stock market. And if you see a flood of dollars coming home, at the same time, our foolish president wants a $5 trillion deficit this year. You have a government that is addicted to spending, like a heroin addict to the needle, and you are decreasing demand exponentially in the need and or desire to own dollars, which means you create more but have less demand, the price falls, interest rates have to rise, bang, everything blows up all at once on a Monday morning simultaneously. Stocks, bonds, real estate, and the dollar all collapse. Now, could it be a movie? Sure. Could it happen? Absolutely. And I think we are closer to that happening than I ever would have given credibility for a few years ago. And when that happens, ushers in the new central bank digital currency, which is a sticky wicket of its own. But all of these things that people have been talking about that seem so far off and so implausible, with Saudi Arabia and Nigeria taking these steps to, in essence, sever the dollar relationship to oil, the hegemony that we have, I think we are witnessing history and not a very pleasant one in the making.
These discussions of the demise of the dollar and, frankly, the destruction of these other pillars of wealth, stocks, bonds, real estate, and dollars, leads always to the discussion of, well, where do you go? And my father-in-law, I remember him 15 years ago looking across the kitchen table to me and saying, as he was struggling to survive on dwindling return on CDs at the bank and fixed income from Social Security, and he's going, where do I turn? Where do I turn for income at this point? And it leads people wondering, well, where do you turn to keep from getting their nest egg destroyed? So it's natural to talk about precious metals at that point as being off of that bubble of everything. You're very close to and inside the supply chain of supply and demand imbalance these last 2 years in the retail physical precious metals market. Could you give us a weekly update on what you're seeing? Because one of the things that I'm seeing from the outside, I mentioned to you before we started, was an apparently inexorable increase in wholesale premiums that are squeezing, any special price we put out there seems to be a high watermark that it very quickly gets over flooded by the rising wholesale price coming up underneath it as far as premiums.
Yeah, well, it's important to understand that the primary distributors are the ones jacking up the premiums, but I don't blame them. Then again, I really don't blame them, because if you're watching what I'm watching, and I know you have been, you're out into June or July before you get anything, and that's hopefully. And it's constant delivery delays. It's constant reasons why the delivery wasn't made or why we can't get it. You have an awakening globally where
Well, let me interrupt just so we all understand. When you say you're out to June or July before you get anything, you mean trying to replenish inventory as a retailer from the mints or other wholesale sources?
From the mints. So the big primary distributors are the ones that have contracts with the mints globally, the 6 primary mints, and trying to get sovereign coins. I have relationships that run 30 years. Some of these people are my friends, even though I don't do a ton of business with them, and I talk to them. What's going on, man? And no sovereign coins, no sovereign coins, no sovereign coins. And if you do get them, you're paying north of $6 an ounce, in most cases to get them. And as on a wholesale side, well north of 5, and in most cases. And, you're having to pay up front and get them, if you're lucky, at the tail end of, or the beginning of the summer, tail end of spring. And that's projected. But, you look at what's happening around the world with inflation at, world as high as it's ever been since World War II in the UK, and 30-year highs in Germany, and all over the place, globally. There's chaos. You look at what Trudeau did. There's fear of confiscation of assets and bank accounts. You look at being kicked out of the SWIFT system for larger institutions or governments. Of course, we can draw a parallel to the reclassification of gold as Tier 1 in 2019, another thing I harped on forever, because look at it all coming together. And so the primary distributors, they have no idea when they will restock the shelves. And, in the case of the U.S. Eagle, which premiums continue to rise, the bottom line is that they're having massive difficulty procuring silver supplies to meet the public demand. And that is because there is a law. And that law says that I'll read it to you. The Secretary shall sell the silver coins minted under subsection E to the public at a price equal to the market value of the bullion at the time of sale, plus the cost of minting, marketing, and distributing such coins, blah, blah, blah. But it says the U.S. Mint is prohibited to offering to pay prices higher than the established paper market spot price. In other words, what you have is that no one wants to sell the mint metal at the price that they are by law allowed to offer. And so when they talk about mothballing the Morgan and the Peace program, and when they talk about not having enough blanks for Silver Eagles, it's because they by law are not allowed to go higher than the average global price of silver. And so, with premiums rising, none of the people want to sell them their silver. And this is what happens when you hold down the paper price. And, it's if you're a primary distributor and you're selling Silver Eagles where there's massive demand and you aren't getting restocked month after month after month, and then you see their mothballing programs that had huge hype behind them, and then you see the admission that they don't have the supplies to continue to make things, you start to say to yourself, well, if we're reliant upon transactions, a magnitude of transactions, and we don't know that we're going to have the ability to do those transactions, better make what we can while we can. Now, could it change? Yeah, you've seen it change with me in the past 2 years. We've seen ups, we've seen downs. But to me, what is different now is it was when it was just the virus, it was one thing. And the reaction to it by governments printing copious amounts of money. But it's different now. You see an acceleration in chaos, an acceleration in government control and overreaching government control. And inflation's becoming real to not just North America, but everywhere. So for many years, it was North America being the largest accumulator of sovereign mint coins. South Africa, Australia, Austria, United Kingdom, and now, in a blink of an eye, that's not the case anymore. Now we are competing with the globe, who is all running to precious metals. And when you see an admission by the Russian central bank that, hey, you can pay us in gold, when you see gold reclassified tier one, when you see central bank massive acquisition of it, when you see silver being pulled off the ETFs and the exchanges and gold being pulled off the ETFs and the exchanges, and you look at this as a linear progression, it's so obvious to me where this ultimately goes. Now, I don't know when it happens, and I hope to heaven I'm wrong, but I don't think I am. And I think that the significance of gold and silver to people who are paying attention is real. And it's all of these people, you and I included, that are all competing for a very finite, small pool of metal with tremendous amounts of money that have been created over the last several years. There's your price inflation right there. More money chasing fewer goods. Well, that pool of money and that pool of interest has grown exponentially over the last 2 years. So, I beating a dead horse is something I'm good at. And I say it because I think it's relevant. And there have been 2 or 3 or 4 events in my career that to me shaped my thinking. And the biggest being one of them. What's going on with the petrodollar, the reclassification of gold. I mean, you couldn't look for 2 bigger reasons to own precious metals, and then you throw into it 40-year high inflation and a government that won't stop and massive global de-dollarization. At the same time, the government continues to print, more being printed and less demand. I mean, it's the perfect storm. It is the Great Reset if you continue to see this trend play itself out. And I never would have thought it would be possible a year and a half after, 2 years after Klaus Schwab said the Great Reset, you'll own nothing and be happy. I mean, yeah, it could happen. Everything collapses. And then who sweeps in and buys it? The governments, the big money, BlackRock, I don't know. But everything will be bought at pennies on the dollar as everything collapses. And everyone's wealth is tied up. No one's really liquid. It's all tied up in their 401k and the price of their home. But take it a step further, insurance companies, pensions, where are they all invested? Stocks and bonds and real estate. And when it all collapses, there's your Great Reset. There's your perfect storm. I really hope I'm wrong, but something tells me I'm not.
We don't have time to get into a bunch of questions that I had about, and we'll get into it next week, I guess, when we get a chance to talk to you again about what percentage of our commitments for replenishment of our stock, even with things that we've purchased and that are on our way to us from the mint, have been getting delayed as we make, set expectations with retail clients about when their coins are going to come in, when their bars are going to come in, and then what percentage of those are getting rescheduled by the mints and the suppliers and the supply chains that are bringing them to us. But we'll have to talk about it the next time. Just in a nutshell, I would say I've seen more than I've seen, except in the pit of the COVID lockdowns in the last 2-3 weeks here. But despite that, you're able to get some things in, not many things, but some things. And you've got a weekly special to inform us about.
Yes, we do. We have, and again, what we have right now is as low of in-stock inventory as I've ever seen in 3 decades. And it's not just our company. This is industry-wide. Yeah, there is some stuff. But, it's shocking how delayed you're finding silver. And look, it's starting to spill over into gold. Something I mentioned on your show a few weeks ago that I expected that to happen. And I think you'll begin to see that more and more and more because the real demand has been in silver. But ever since the war started in Ukraine, we're seeing more interest in gold. And I think maybe it has something to do with the talk of gold being accepted for oil or Russia pegging it. But nonetheless, I still do think silver is the most undervalued asset on the planet. And there are opportunities to someday convert silver to gold when the ratio corrects. So if someone asks me, where is the value? It's in silver. But the way the world is going ultimately with the reclassification, I just have a feeling that ultimately we all want to be in gold. So with that being said, trying to find the best value in silver that would ultimately allow us to reap the benefits of playing this conversion rate ratio play. We have chosen 100-ounce silver bars, and we have in stock, between 800 and 900 Asahi 100-ounce silver bars, brand new, and they are at $3.75 per ounce over the price of silver. And it pains me to say that that's pretty darn close, to as cheap as you're going to find silver for these days, when that used to be more than you would buy Silver Eagles for in 2019 or for the rest of my entire career. But, this is a trend that we're seeing. And right now, Silver Eagles are north of $13. So, and something, then again, since February 2020, premiums on Silver Eagles have never come back down. They haven't. I mean, they've come down a little bit, and then they go back up. So either the U.S. Mint is the complete and total model of inefficiency, or the Silver Eagle, much like everything else that is trending higher, will follow a pattern that I have been talking about on your show for well over a year, almost two, and that is a market defined by an inability to readily source product. And I don't care if people want to debate me that it's about a supply chain product or that it's just the reality that there isn't enough silver in refined form to go around. And, one last thing, and I'll, because I know you asked me a specific question, but I had dinner with Keith Neumeyer last night. I'm in Las Vegas, and I asked him some questions. And, it's becoming very obvious to me that there will be a push to disintermediate at some point the banks that finance the mining industry by going directly to the industrials at some point. Don't know when or who's going to be the first to do it. Maybe it's Keith, maybe it's someone else, but going directly to the Teslas and the Samsungs and the manufacturers of solar panels, or directly to the U.S. military or whatever it may be, there will be disintermediation of the banks. And so I think that the real price of silver will find its way. We will see it at some point. And looking at silver right now at $25 or under per ounce, I just can't, even though I ultimately believe that we want to be in gold. Ultimately, I think that this is really the value proposition of a generation. And so while we can still deliver silver, we will do that and offer it best we can. So about 850 Asahi bars in stock, $3.75 over for immediate delivery. That's the special this week.
Thank you so much, Andy. I know we've got to run so we can get this up tonight. Appreciate you taking time out of your busy travel schedule to give us this update. And we're going to look to zero in on some more of the strains in supply chain next week. And just thank you for being here, as always, on Liberty and Finance.
I hope you stay well. Have a great rest of your day, and look forward to talking to you next week.
Thanks, Andy.
See you, pal.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, You will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.